We got a bunch of an economic data dump that we're going to give you, get you all caught up on your economic data today. First and foremost, early this morning, mortgage apps. We'll go over that quickly. Even though the 30-year mortgage rate went from 6.24 to 6.21, weather, it looks like really had an effect on mortgages. The composite down 8.9%, purchases down 14.4%, and refinances down 4.7%. We'll leave that there, but the good news is rates have come down slightly. Then we got ADP private payrolls. We're not going to get regular payrolls this week, so we're going to have to rely on ADP, and it showed a similar trend to what we've been seeing. Up 22,000 jobs, a modest number for private payrolls, kind of what we've seen in that low fire environment that we find ourselves now. ADP, if we look at the main drivers, it was education and health services were up 74,000 jobs. Financial activities up 14,000. Those were the two biggest pluses. And professional and business services lost 57,000 jobs. Then, just a half hour or so ago, we got two data points. PMI composite final, which both numbers, the composite index of 53.0 was better than expected. They were looking for something around 52.8. Services index, 52.7, also better than last month, better than expectations. So both of those in expansionary territory. Then at 10 o'clock Eastern time, we got ISM services data. That also came in line, 53.8, but breaking down some interesting parts if you dig into the numbers. Business activity, 57.4%, higher than December. New orders, 53.1%. That's 3 points lower than in December. Employment was also lower, 50.3%, just above the expansion and contraction level of 50. The supply deliveries, 54.2. That was 2.4 percentage points higher than December. Prices index, 66.6, higher than the previous 2 months. And inventories, 45.1, down 3 of the last 5 months. So inventories down 9.1 points for the last month. So there's all your data. That's what we've gotten today. Good expansionary in some of the PMI numbers.